The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 227, Nasdaq is up 30, S&P's up 26, gold contract down $12, trading at $17.12 an ounce. You got silver down 7 cents, $15.14 an ounce. Light sweet crude, actually it's up right now. It traded to a low to like $11 out here this morning. We're up 69 cents, $13.39 a barrel. Notes and bonds. You get the 10-year up 7 ticks, 138.28. The 30-year up 24 ticks at 181.10. And King Dollar's down at 332 ticks, trading 99.709. The euro is out here at 108. The yen is out here at 106.5, and the British pound is at 124 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good morning. How we doing?
Doing good. Another day, another dollar, and we'll see where this market's going to take us, man.
That's right, man. We get some earnings. We got Google after the bell, right? We already got action this morning, but volatility, man. VIX almost made it down to 30 before bouncing a bit.
And let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, option strategies, futures, outstanding program. If you haven't test-driven yet, the Thinkorswim platform, so easy to do. You're sitting on the site right now. Hit that button, bring it up. They'll allow you to trade with paper money each and every day as you can follow Kevin and his team. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, kind of an interesting day we got setting up here. When does an up 27 in the E-minis feels like it's down? Because they just sold off 10 or 12 points.
This NDX is weak. I mean, it started yesterday, so this is going to get intriguing, right? I mean, you know, we get this
remember,
big...
guys, you have every FANG stock except Netflix is coming out with earnings this week.
I know.
So not surprising that there'd be a little hesitation, and the NASDAQ is so heavily influenced by the FANG stocks that it's not really surprising that the NASDAQ is just dipping its toe into these markets. A lot of volatility could be on the horizon in the NASDAQ.
Well, you know what's so cool, Kevin, right? Which is, man, folks, markets are so deviant, it's unbelievable, man. You know, when I saw the NASDAQ starting to give it up yesterday, I'm saying to myself, this is really intriguing, man. You know, we got yesterday the VIX was at, 33 or something, right? And the market wasn't volatile. Yeah. But this morning out here, man, even we're trading at 31, it's like, man, this is getting a little dicey. Do you know what I'm saying? It's like, okay, which way are you going to go out here?
How about the big move in crude oil this morning and all the way back? I mean, you know, that two-day move was vicious, and all of a sudden they bring them back from out of nowhere. That's pretty incredible.
It really is, man. And that oil move, folks, okay, now this is what's so cool about that, actually. I mean, you know, what you had out here is that, you know, yesterday the USO is turning around and saying, listen, man, we're getting out of the June contract. You know, Kevin, that's almost, we've seen it a few times, but it's very unusual when you have large ETFs that are actually telling the market, okay, I'm getting out, I'm moving forward. They got to do it on disclosure. Yeah. But that was a trip, and I said to Tommy yesterday, I says, of course they're going to sell it down. You imagine being a bank, and you know that they own 25% of the contract, and they got to sell it. And they told you they're going to sell it, right? And then this morning...
And you notice, guys, what sold off, Tom? Only the front month.
Yes. Yes.
The back months were relatively stable, and they were actually up this morning when the front month was down. So all that really happened was the calendar spreads went crazy in the futures.
Could you imagine if you were still in the pit, Kevin?
Mercy.
Field day.
Yeah, exactly. Wait, you're telling me what you're going to do, and then I got to make a market?
I know,
let me
man.
Guess what I'm going to do.
It's pretty incredible. It really is, you know. So what are we going to be doing today? I mean, this is the most wonderful time of the year for you guys, you in particular.
Exactly. Well, obviously on Fast Market, we're going to trade Google and Starbucks.
Yep.
That's pretty easy. Two of the biggest ones today. So we can't wait to trade those and talk about those today. So mainly that's the one we're going to be doing. Later on today, we'll be talking about, obviously, Boeing has earnings tomorrow morning. So there's just so many names.
Yeah, there are. And I guess, when we look out, it's still pretty hard looking out. I mean, and I guess the earnings, most of these earnings are coming in with what? Only 2 weeks of kind of the destruction that we suspect that they have. Okay, so I guess looking out is going to be the big deal here.
But here's the thing, Tom, and here's one of the names that we talked about yesterday in the show, PepsiCo.
Yes.
PepsiCo's up, $1.64. Now, two things we talked about yesterday was salty snacks and the Frito-Lay effect on PepsiCo. And number two, we talked about something else that you can't learn a lot of places. I traded PepsiCo from 1986 to 2006 in the pit as a specialist.
Yes.
And I can tell you, it just doesn't move a lot on earnings.
Okay.
It's just always a muted move. And there it is. You're getting another, it's moving. It's up $1, but guess what? The expected move was much bigger than that.
And so
the iron condor that we put on is killing them because of that.
Yes. And that's what you're hearing off Kevin, which is so cool, folks. So picture something. And that's what I basically, when I'm kicking off the show saying you want to understand the option strategies, where Kevin's laying this out is that most of the time it's a mooted move, small move, okay? Bottom line is that you just have to understand the strategy to put on if you're looking for a small move. And in particular, what you just said, compared to the expected move. So that's really cool when the expected move was over that, but yet the experience in the past has said, okay, I'm going to take the risk parameter into this trade. So pretty wild, man.
Right. If you look at Pepsi right now, guys, it's trading 136 and change. We're short the 139 calls, and we're short the 131 puts that expire in 2.5 days.
Right.
3.5 days. So those are just, that volatility's crashing on those today.
Yeah. Pretty amazing. Yeah, because of course, when they come out with their earnings, that's it. The crush is here, right? Because it's like, okay, what else?
Right.
What else?
The event comes out, and the implied volatility from the event comes screaming out.
Yeah.
Of the option.
Boy, and Google today, this is going to be a whole different ball game, man.
Now that's a different animal because Pepsi, I have a history trading Pepsi, and I understand that its history is muted moves on earnings. But Google, it's got a history of some massive moves on earnings, much bigger than the expected move. So when we look at Google right now, let's take a look at what that expected move is. $62.
Wow.
Well, guess what? That might be low.
Yeah. And, it was interesting, and Tommy showed this morning, that when you brought up that Barry Diller came out and said that he's only spent $1 billion versus $5 billion for all his travel companies this year. Like, that's like, really? Wow.
I know, big numbers, yeah.
That's a monster, man.
Exactly right.
Monster. Well, listen, man.
But that being said, if you're looking to the future, right?
Yes.
If you're trading the stock out 6 months, Google's going to be fine.
Oh, yeah.
It's going to bounce back.
Yeah, no doubt. Listen, folks, 45 minutes from now, outstanding show. Kevin, you have a great one, safe one. We look forward to the program. We look for all these earnings coming out.
Thanks for having me on, guys.
Thank you. Stay right there. Tommy and I come right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 257. You get the NASDAQ up 4. S&Ps are up 26. And if we get over to these NQs, folks, these NQs, this started yesterday. You had some heavy weakness inside the NASDAQ. This thing right now is building cause, folks, to basically break not only just lower. You get under 87.77. Which is only 20 points, and you can be down into 85, 83 in about a heartbeat. So this is going to get really intriguing. I mean, the battle's on here for sure. If we go take a look at the S&Ps, what you're going to see inside the S&Ps, this last bar in the S&Ps, the second time that we actually did get some volume on it. And the S&Ps, they're holding pretty good. But the bottom line is that 28.86, we're at 28.94 right now, is going to get retested. And if that actually can break, it would have to get lower than that. 28.79 would be the number there. But I suspect you're going to see this battle all day. And if the NDX 100 loses the battle as Tommy and I are on the air before we get off the air, which I expect they're going to, you're going to see a red market right across all the indices, which is about as deviant as you can get. But let me show you something, because all the indices, well, no, the S&P and the Dow Industrials, as well as the NDX 100, failed on price and volume yesterday. And what does that mean? We got over the swing point. The swing point in the SPY was 287.30. You had 146 million shares. You closed under it. You got over it, closed under it with 77 million. That's a failure on price and volume, as is the NDX 100. NDX 100, got up to a price point yesterday at 216.63. Your benchmark was 216.51. It had volume out there yesterday of 36 million going into 62, and that was a failure on price and volume also. Pretty deviant, man, And we'll see where these big FANG stocks, because they control the market, man. Well,
they sure do. And like you were talking about, man, so Google after the bell, and the article that I had referenced on here was just talking about Google set to take a hit as travel websites in particular / online ad spending. Now, this is just talking about the few of the biggest of the big, right? Like you were mentioning to Kevin. So you have Expedia chairman Barry Diller. He was on Squawk Box earlier this month. They promote heavily, would spend less than $1 billion on advertising this year, down from $5 billion in 2019. And you have Booking Holdings, the parent of Booking.com, Priceline, and Kayak. They're going to slash their ad spending just on Google from about $4 billion last year to $1 to $2 billion this year, let alone the amount of small businesses, right? That's the quickest way, man. Unless you're advertising for like an online restaurant, maybe that makes perfect sense right now. If you're not in that market at all, then of course you're not going to be advertising any type of a come to our store retail. There's a lot of industries where that's just not happening at all.
And Tom, when you bring those companies up, folks, those two companies, I believe, are the largest travel companies in the world. So that's saying quite a bit, man. Do you know what I mean?
It is.
It's like, okay, we're not talking, the mom and pop. And so you're also talking a business plan here because, when you look at the aspect, I'm wondering, like, are the airlines going to, when they come back up, okay, do they have the middle seat you're not going to use? What's going to happen in first class? You're right next to each other in first class. Are they only going to sell one seat?
JetBlue just came out and they're going to mandate masks starting May 4th or 5th. JetBlue, the first airline, so that's going to continue. So I think you're going to see that. I mean, you can't help but rub elbows with somebody if you're sitting next to them on a plane, man. And I don't know how you rationalize that. When you're supposed to have 6 feet of social distancing, and these are the people traveling, which would be the potential to spread it the quickest. So I don't know how the airlines get through that, man.
I don't either, man. Not even.
You really got to have a long-term outlook for airlines, man, because life is going to be messed up for the next 12 to 18 to 36 months. Who knows, until things really...
Until the vaccine, right?
Until we all feel really comfortable to, being crammed onto a plane. I mean, think about that, right? That's not at all comfortable right now.
Well, you know what I saw New York City was doing yesterday, right? And they're going to close like 40 miles of streets.
I saw that headline. I didn't check out the article, but I did see that.
That is so cool, man. I mean, I'm telling you, we're downtown St. Pete, folks, and this has always been a big bike city anyway, a walk-in city, but it's even larger now, and it's so cool. I mean, and what does happen? I understand you can't do it in every city, but you can get around New York on a bike real easy. You can get around St. Pete on a bike real easy.
So were they closing the streets to cars? Was that what it was?
Yeah.
Now,
I think this is just they're putting it out there. I don't think it's happened yet.
Okay.
But that is,
you're going to see some drastic differences as things open back up. That could be totally foreseeable, man. Planes, like you talked about it, at least for a period of time, probably. It'll, I imagine. I mean, I can't see it any other way.
No doubt.
Yeah.
Let's go to Tony in Wellesley. Hey, Tony, what's going on, brother?
Hi, Tom. Long-time listener.
I know. How you been, man?
Hey, Tony.
Oh, good. Hi, Tommy. You do a nice job at 8:30, Tommy.
Thanks, man. It's great to hear from you, Tony.
Yeah, God bless you all.
Thank you.
Listen, the TVIX, I'm thinking of buying some. TVIX. I was wondering what you guys thought of it, both of you.
Okay, so let's take a look. So you get the TVIX, that's the velocity shares. That's 2 times the shot ETN. So you're trading at 197. Now, my understanding, let me just look at this for a sec. The note provides investors with cash payment, scheduled maturity, early redemption, 2 times the performance of the underlying index of the S&P 500 VIX. So you're looking here. I see what you're doing. Okay, so you're looking for more volatility. I mean, if you're buying this, on a day trade, Tony, but I don't think you are. Yeah, I mean, this can go to 287.
How much?
287. Where I'm going, you're at 195. 287 is the low of the last pop higher, which was last week. I mean, this thing, I know you've traded it before because I don't like trading any VIX model, actually, Tony, because what happens is that the downdrafts normally do come out of nowhere, and I understand you want to be in it because you can't get in it, folks, when the downdraft actually starts, okay? So I get why you want to do it, and I know you've called before, and I know you trade that. So it's not a bad place to start right here today. That's one way of looking at it. Do you know what I mean?
Yeah, I just noticed the NASDAQ went negative.
It's negative, and it's negative fast and furious, right? And so, we were just talking about here. I'll bring the NASDAQ up again. This NDX is basically signaling. I mean, this is a fast breakdown, and we just broke. Let's see. So you're at 87.58. Yeah, man, this thing can get all the way down to 85 in a heartbeat, which that's 80. Yeah, that's almost another 180 points down. But it could do it pretty quick, man. You know.
Tom, how long you been on the air now?
26 years.
Yeah.
1994. Isn't that sick?
Your truck driver friend in the poet when you first started out.
I know, man. And hey, listen to this. You know, this is so cool. One of the guys I did the program with, he's in the den now, Mark, okay? So when we started, it was Mark. Mark, who was he? I can't believe I forgot the other guy. That's pretty sad.
Paul.
Yeah, exactly, man, exactly. And we had a blast, and we trade live, folks, okay? We're all in the same office, right? Gotta love it. Thanks, brother.
God bless.
Thank you. Stay right there. Tommy and I come right back.
Hi folks, this is Tom O'Brien. On Thursday, April 30th, I'll be holding an all-day online seminar where I'll teach you the essentials of my trading methodology, Timing the Trade. From 9 a.m. to 4 p.m. Eastern Standard Time, with a lunch break from noon to 1, I'll be covering quality volume, ABC structures, Fibonacci confluence zones, cause and effect, swing points, and much more, all while the market is open in real time. When you sign up, I'll mail you a physical copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. You'll also receive a free month of my daily trading newsletter, Market Insights, a $169 value. This 6-hour online seminar will be archived if you can't attend the entire day live. My Timing the Trade webinar is taking place Thursday, April 30th, so don't wait to sign up. For all the details and to sign up today, visit the front page of TFNN.com. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 183. Nasdaq's down 22. S&Ps are up 15. Let's go to our man Jose in Lakeland. Jose, what's happening, brother?
Good morning, Tommies. Good morning, Tommies. I'm in my pajamas, enjoying the show, making spaghetti sauce.
Oh,
you know
I like
what
it.
The secret to good spaghetti sauce is?
I like it.
Don't be stingy with the oil. Put the oil in there. That's what makes a good spaghetti sauce.
Hey, you know,
Tom?
yeah.
Yeah, go ahead.
No, up in St. Pete, man. There's an Italian deli, man. I gotta get. I'll look at the name of the oil when I get home tonight. This guy brings it in from Naples, man. It's insane.
Oh,
and you know what happens?
That's the real McCoy.
Yeah, and what happens, folks, is that when you cook with this oil, they think you're the best cook in the world because it's really the oil. No matter what you put with it, it's awesome, man. It's crazy.
That's true.
Yeah.
That's true.
Yeah.
Hey, Tom, I'm in my pajamas, and I want to stay in my pajamas. I'm comfortable. It looks like I like trading the market at home. It looks like the S&Ps are doing a double doji with a backflip. I'm seeing a little reversal here.
The NDX 100 wants to bring this S&P lower. So the battle's out here. We'll see whether it can do it. The S&P is still hanging tough at 16. But my take is that we're going to go red. We'll see how this shakes out in the next few. If we're going to stay red, I think we have to go red by like 11:15. That's what's going on here, because here's the battle. Do you know what I mean? So.
Okay, I've seen this action over the years with companies like Google, Apple, and whatnot about to report. If they go red today, I don't think even a good report by Google and Apple at the end of Thursday is going to reverse things. Who knows? But hey, Tom, the young guy there, he won't remember this, but you will. You're old enough. Do you remember Wall Street Week and Louis Rukeyser?
Oh yeah, big time. Big time.
Oh my God, that was great. Friday night, I never missed a show. He actually wrote me a letter. I wrote him a letter. He returned with a gold leaf letter.
Pretty cool,
He's
man.
the guy with the gray hair. He looked like a mortician.
That's pretty cool. Hey, so
Yeah.
let me ask you, Barrick, are you still in the options on Barrick?
I made a big mistake and I got out of them.
Oh, that's all right. Okay, but you made money. Okay.
I'm glad you brought that up. Is gold going to pull back? Is Barrick and Newmont going to pull back with this market? Or if and when it does, I'm going to be all over the call options. But
yeah, it looks to me that Barrick still wants to run this $30 level, $28.50, $30. That's what I mean, because we had this pullback this morning and it just shook it off again. Gold keeps shaking it off, man. I mean, they smacked gold all the way down to 1704 today, and now it's 1713. It does not want to go back in that lower range. The lower range starts at 1707. Yeah. So.
Yeah, I got my eye on it. Tom, my spaghetti sauce is burning. I got to go.
Okay, man. Have a great one. Have a safe one. I wish I had pasta for lunch yesterday. I ate it for breakfast as soon as I got off, Tommy. Wish I had some right now, man. I'm starving. Tommy's mic's not working.
Oh, yeah, there we go. I said, that's not fair. I'm starving already. Go for it. Totally.
Let's go. We're going to go to Philly, man. Philly's got some good Italian food. Let's go to John in Philly. John, what's going on, brother?
Tom, Tommy, good morning to you both. Well, the North End in Boston and South Philly, they're kind of twin sisters.
They are. No doubt, man.
Yeah, you're making me hungry. Tom, a couple of things. First, thank you for eagle eyes on the NASDAQ and the NQMs this morning. Second, back on Friday the 17th, live on your shows when the E-mini S&Ps were up, closing the day out up near 2880. You said, hey, I'm suspecting we're going to get a good pullback. And Tom, I recall you stating a range, 2750 to 2640.
Yeah.
Well, lo and behold, by Tuesday the following week, we got right into that range, the higher end of that range. Now we're right back to the high. And we've all heard what you've just analyzed this morning. My question now is, if in fact we've put in a short-term high, big F, but if we do, can you share with us your thinking on what the likely roadmap is the next week, 2 or 3?
Yeah, I think we come right back to a normal retracement. Well, if we look at the S&P, the minis, the first swing point, of course, is at 2717, okay? But I suspect what would end up happening, if in fact, we get some action here, is that you come back to the breakout area, which is the 2635, somewhere in there. What happens, folks, is this. If this has been a cool trading market, there's no two ways about that. And normally what ends up happening, if you're going to get a failure, first you go to the swing point, the 27.17. And which would be really cool is this, folks, okay? If you're bullish the market, like my take is that we're going to go back to the breakout area, then I'd be buying again, okay? So what I want to see is this. I want to see us break the swing point from the 21st with light volume, and then it gets extended. That would be like a beautiful setup because it would be freaking the bulls and the bears out, basically. We'll see how that shakes out, but that would be a nice setup, man, because it's going to be hard to break down the breakout area because we had some good juice there, especially on the first leg down. Do you know what I'm saying? So,
excellent. Thanks for the roadmap. That's very helpful. Appreciate your time, Tom.
Okay, man. You have a great one, a safe one. So you can see this S&P, Tom, right? This is really intriguing, folks. I mean, this is you don't get to see this really a lot. And what it really is, the bulls and the bears are fighting this out in a huge way because the bulls, and what I'm talking about is not me and you folks, okay? These are the large banks that are trading. They know, okay? Let me tell you, they're fundamentalists, but technically any big trader, they know the technicals behind it. And they know that if the S&P basically starts trading under 2880, they know that the machines will start selling the S&P. The traders will start selling the S&P. And that's why you're seeing this battle up here. Do you know what I'm saying? Is that because we're still in a larger range. This is still in a larger range. And if you go over to the NQs, the bottom line is that the NQs gave it up. So your probability is a little bit better because the NQs did give it up. And the NQs right now, and the last, so the last trade down at 87.50 has volume, so we'll be back down to those levels. So,
hey, did you see some of the cannabis stocks on the open this morning? I mean, everything kind of sold off, but Canopy, man, down almost $2 from where you opened. We were at 18.46 pre-market, and we're trading at 16.76. I mean, just continued volatility on these for sure. I think is what you want to see. Huge upside, but I was, thinking to myself from under 15 on Friday to almost 18.50, but boom, just like that, we're at under 17.
And I wonder why, huh? I guess it's just at that point that
there was a lot of
some excitement going, right?
Right. I mean, companies that I love looking at, we've looked at them. I mean, check out even Disney, man. Talk about an acceleration higher, and right on the open, you sell down from 110 to 107, $3, just boom, gone. On the open on that stock.
So those are larger portfolios, man. Right. You start moving markets around like this. This is going to be this is the bulls and bears are out there fighting, folks. Dow Industrials right now are up 150. Nasdaq's down 13. S&Ps are up 15. Gold's down 870. King Dollar's down 312. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 98. Nasdaq's down 31. S&Ps are up 9.5. And folks, as you come over to our website at TFNN, you're going to see right in the featured content. I'm going to be doing an all-day webinar this Thursday, April 30th. It's a Time in the Trade webinar. If you do want to understand price and volume, how they move markets, you know, as we're going through these, how important swing points are and how important basically a failure on price and volume is. Okay, I'll be going not only all over that, but a lot more all day long. The workshop will start at 9 o'clock. It goes 9 to 12. 12 to 1, we take a break. 1 to 4. The cool thing, of course, is that we'll have markets open. You get volatile markets. What I'll be doing specifically is showing you the setup, number one, that is inside the time in the trade. And then we'll bring the real markets up so you can see how this works intraday as well as daily. What you get with the workshop, you get my book, which is an $88 value, my newsletter, $169, plus the workshop. So haven't done one in a couple of years. I'm really looking forward to it. These are always fun, and each and every time, folks, that any of us here basically going through markets, we're learning quite a bit also.
Just to add to that, right? So it makes out is, you know, we're talking about a low VIX, right? Relatively low, as in we're 33.88 right now. I think
Yes.
we were almost 30. The rule of 16, right? Now we were flirting with like 12 for years. The rule of 16, that's going to be a 1% move every 1 out of 3 days.
Okay.
Right?
Yeah.
So a 32, the market's still pricing in a 2% move every 1 out of 3 days. Well, I mention it because we're almost becoming numb to the moves in the market, you know. I mean, you had overnight from midnight in the S&Ps, just even right here, 28.51. We traded up 62 points to 29.13, and now, even as we accelerate, I have this already on there, we've given back more than 618 of that full move up. That would have been 28.74. We're at 28.72. We are, what are we? We're more than 40 points below where we were at, and it's dropping fast right now, actually. The S&Ps are about to go negative.
Yeah. What does happen, folks, that when you get a failure on price and volume, particularly so watch how this works. This is when you start talking to yourself, okay? So what happens is this. So picture where the S&P is and was, right? We know that, you know, the top of the range here on the S&P was 28.85, okay? So, you know, this morning when I wake up, Tom, right, I'm saying to myself, you know, the first thing we all do as traders, folks, it's like, okay, hit the button, and I got it set up on my phone. I can just hit the button and the S&Ps come up, right? And I'm seeing up 35. I'm saying, oh my God, I don't believe it. Because what happens here, folks, is that we're at a level. If you got a breakout going, you'd have a monster breakout. Okay?
Sure.
So it's almost like too easy sometimes when you're looking at it technically. Now, I've been doing it long enough that when you get a failure on price and volume, particularly in the NDX 100 and the S&P, which we got both yesterday, you know that you have a little shot, okay? But I wasn't, convinced. So the first hour as I'm drinking coffee, I'm saying to myself, okay, man, so what's going to be the game plan here? I mean, is the S&P really going to make a run up to 31? You know what I mean?
Sure.
But what we had, and this is what you got to put together, folks, what we had was I brought up the fangs pretty quick, right? And they weren't there. And then Tommy and I have talked about this on the air before. Let me show you something. I should have done this at the beginning. Well, no, it's still good. See the leaders inside the NDX 100, folks? They're the dogs. United Airlines, the leader out here today, 5.8. Carpart, that thing gets smoked also, 5%. Ross, I'm not sure if Ross was, but two of those for sure. Yeah, Ross is in actually pretty good shape. But two of those four were equities that, you could get a bounce going, but they've been the dogs of the marketplace. So I says, okay, we got a little shot here. So we'll see where it shakes out. But hey, you know what I was thinking, man? This is pretty cool. So what happens in trading careers and just investment careers, folks, okay, is that you have to go through so many cycles. So for you, Tom, and younger traders like this, right? This is really cool, man, because you got to see the 2008 downdraft and this one. That's like insane.
Yeah, it is. It is.
Yeah, because you can't teach this part of it, man. Do you know what I'm saying? You got to feel it. You got to, yeah. Wild, man.
And just seeing, I think, the biggest thing is seeing how, we had talked to Kevin Hinks about it before at one point, that they sold down everything, right? When panic like this sets in, you've talked about it many times before with gold and so forth, that everything gets sold. When there's a panic that really spreads, like was in 2008, very different from right now, but liquidity crisis kind of similar in there, but everything gets sold. And you had companies that are just giants that were never going to see anything pull back, like Amazon, fall out of bed from 2,200 down to 1,600 at a time when they couldn't keep up with the amount of business they were getting, right? So you have to square that in your head, and that's the first time I had seen anything like that. I wasn't as attuned, being 27 years old, 28 years old, versus the opportunities and how quickly, and like we talked about many times, man, when the Fed is going to come running, right, and you have that kind of a bazooka behind you.
Yes.
It's not to say that you can never lose money. The market's pulled back 30, 40%. But look for, on a longer term basis at least, right? A year, 2 years, 3 years.
That's right.
That they're going to make sure the wheels keep spinning. And that alone is usually enough to get the markets through on some type of a time frame, I think. It was just, Amazon, Walmart.
It is, because what happens, and we've talked about this before, it's about cash flow, folks, okay?
Right.
The amount of cash it's about cash flow. To keep companies alive, they'll figure it out. I mean, we'll all figure it out. That's the bottom line, okay? We're not going to roll over and frickin' die.
Life goes on, exactly, And people are used to making a certain amount of money, okay? So a certain lifestyle, that's all going to come back, man. There might be some pain for a year or two, that's for sure. But with the Fed, you're going to see it. And I can't wait for it. Hopefully, can you imagine the non-farm payroll numbers when the economy swings back into rotation? Hopefully they're just as staggering to the upside. When you have companies hiring back, even if it's 50% of their workforce from nothing, you have huge companies hiring back hundreds of thousands of workers potentially all in the same time, something like that.
Yeah, no, I think that's going to take a while but I think that's going to happen. The large companies, folks, okay, you got the administration and states fighting over what's going to open, what's not going to open. These large companies are not going to open in the states no matter what these governors are saying, because they're going to lose so much money, okay? You're not going to open back up and say only 25% because can come back in the store. Well, why are you going to, get all your payroll back up, your electric back up, your cleaning crews back up, and you'll leave them that 25% in the store. They'll just stay closed. They should. That's,
Right.
Yeah. Stay right there. Tommy and I come right back. Don't forget about the webinar, folks. You really want to understand how to bisect and dissect these markets. Go over to TFNN under featured content. Check it out.
Less than 48 hours, man. Less than 48
hours. I like it. I'm going to stay up the whole time.
Wrong. All right.
Dow up 51, NASDAQ down 59, S&P's up 4. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up at 26, NASDAQ's down 67, S&P's up 2 points, and we've had quite a 60 minutes here, Tom.
I was going to say, you better talk quick when you say the S&P's up. We're within 1 point of negative territory, man, and yeah, quite a drop-off.
And there she goes.
Yep, there she goes, exactly.
And, when you get a battle like this, folks, okay, you can expect some lower prices out here, man, because the bottom line is that, the S&P's got to get down about 10. If it gets down 10, you can see it down 30 or 40.
I was just going to mention that we covered the VIX, right? That at 32, which is where you were almost, you should see a 2% move every 1 out of 3 days. Well, we just saw a 2% move up from midnight until 9 a.m., and we're approaching a 1.7, like 1.8% drop since that level.
Right. And the reason that I'm saying you can see the S&P down so far, folks, is this. When I started that, when I woke up this morning, I said, oh, no, because this was a breakout, and it's a failed breakout. That's what's going on. So there's plenty of people that like buying breakouts, okay, which I can understand. You know, this could have been a monster ABC up, and, you know, so.
I mean, just for some context to where we were, man, the NASDAQ, I know we're lagging, but, geez, I mean, we almost made it to a 78% retracement of the entire move down,
right.
You know?
Right.
Things might be okay, but...
Well, things are okay, but things aren't okay when, as you reported, that, you know, the bottom line is that instead of spending $5 billion, Expedia is spending $1 billion.
That's what. So you're within 10% of where you are in the index, right?
Seriously, man.
You want to be flat? You really want to be flat right now with everything going on? No,
Yeah.
you know, not quite.
No.
So don't be surprised, man. I mean, so.
Stay right there, folks. We got Think or Swim coming up next. Then we got our man, Mr. Basil Chapman, riding that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.